My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends? I'm just trying to make a little money. My job is not just to educate, but also to entertain and teach. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes it all comes down to economics 101, telling you the difference between what's macro, meaning the broader economy, and what's micro, meaning what's company specific. And that's how I felt after last night's jaw-dropping interview with Raj Subramaniam. He is the brand new CEO of FedEx, where he dropped a bomb right here about one of the worst earnings misses I've seen in ages. He thinks we're headed toward a worldwide recession. His comments were an important wake-up call, picked up everywhere, I have to admit, that sent the market down today. Dow slipping 139 points, S&P sinking 0.72%, NASDAQ coming 0.90%. Once again, though, this is what's really important, because you're catching me at the end of the day. Once again, the market was much lower intraday and managed to rally in the close, defying the pattern the other day where it was much higher, then it went lower. These days are traumatic. So why, then, do I say it all comes down to macro versus micro? Because when a CEO comes on here and tells us that things are going awry everywhere, China because of COVID, Europe because of Putin, America because of Fed rate hikes, well, maybe there's more to it than that. You have to figure out how much of the miss comes from the macro, all those things I just mentioned, and how much might be from what I would regard as perhaps suboptimal execution. Or perhaps a calculated decision to get costs under control now before we get too deep into recession and we run off the rails. In this case, I think it's 70% macro with FedEx, so the global economy really is in rough shape, and 30% company-specific. And the FedEx needs to do some very serious cost cutting. It's got to do it now. The actual revenues you see weren't even all that bad. It's the earnings missed by $500 million. The earnings that are weak, meaning execution definitely played a role. Still, when the CEO of FedEx says worldwide recession, we're not going to dispute him. He's got too much of a book of business to do that. I'm taking him at his word. So that's where we're going to start our game plan for next week. Because if Fed Chief Jay Powell watched our interview last night, I think he catches the show periodically. I mean, there was no sports on last night until, it was on Amazon. He might discover that he's made more progress whipping inflation than he might realize. Then again, if he just reads the briefing books of the Federal Reserve like they did in 2008, he's going to miss what's really happening. See, we're in the midst of a truly aggressive Fed tightening cycle after a monstrous amount of inflation. No doubt about that. The scuttlebutt says that we'll get another 75 basis point rate hike at this Fed meeting. Third in a row, because they're bringing the pain to stamp out wage inflation. Yeah, he's creating
the house of pain.
Because we can't have
house of pleasure.
I get that. Unfortunately, we're only just now seeing the effects of the last rate hikes that have taken mortgages to 6%. Have you noticed that? And laid the groundwork for firings and bankruptcies across the economy. But after those FedEx numbers, maybe Powell will hit us with another 75 basis point hike right here, and then say, maybe it's time to take a more measured approach in order to assess how things are going with wages, with rents, the usual. Now, that, not another 75 basis point hike in short order, might be what I call prudent, the prudent move. And by the way, prudence is warranted after the negative corporate news flow that we are now getting. And it's a flood. The United States has the strongest economy of any large industrial nation in the world. But we may not be able to withstand a worldwide recession that FedEx is talking about, especially while hobbled by dramatically higher interest rates than we had a year ago. The help-wanted signs are about to come down, I think. But we don't want them replaced with going out of business or lost our lease placards. Now, there's plenty more in our game plan that could make life easier for Jay Powell. And let's start with AutoZone on Monday. Look, the average car keeps getting older, right? Because we can't make enough new ones, and the old cars need more replacement parts, which translates into more customers for AutoZone. I expect a bang-up quarter. This stock's been a fabulous long-term winner. I want to know if they see an end to the morass that is the car shortage, which would be crucial to beating inflation. Whenever Powell talks about bringing the pain to cool down the economy, he's speaking of wages, homes, and cars. Wages, homes, and cars. So AutoZone can give us some real insight. If only the car companies could somehow meet the darn demand. They are nowhere near doing so, and used cars aren't coming down enough for Powell to stop right here. They are a real point of pain and contention that makes Powell have to be tough. By the way, we're seeing a similar dynamic in housing. Later tonight, we're speaking to Ted Decker. He's the CEO of Home Depot. You should know that the average age of a housing stock is getting to be around 40 years old. Both cars and homes are getting real long in the tooth. They need care, and that kind of care costs money. On Tuesday, one of the most despised stocks in the world, yet it's still owned by a lot of people, is NVIDIA. Yes, and NVIDIA gives us a glimpse into the future on Tuesday, the future of the Omniverse. And this longtime charitable trust holding has been tarred and feathered because it's tied to a pair of definite declining industries, gaming and, yes, I'm sorry, but crypto. But NVIDIA is the kind of innovation powerhouse that sees the future before you and I do. I think we'll learn a great deal when we hear from visionary CEO Jensen Huang. Now, look, I know the stock's been horrendous performance. There's no doubt about that, and sticking with it on the way down was a mistake. But that's how NVIDIA behaves. You get terrifyingly swift moves down, followed by long rallies. I'm not going to miss a word of this speech. 11 a.m., by the way, Eastern. You can watch NVIDIA's website. NVIDIA will bottom when everyone who can't take pain leaves it. I sense we're closing in on that moment, but we are not there yet. On Wednesday, the Fed will overshadow anything that is said by individual companies, but we've got some important ones reporting, like Lennar and KB Homes, gigantic home builders. I think both home builders will be soft. How can they be anything else with mortgage rates soaring so fast? We definitely need the price of housing to come down if we're going to beat inflation. Anything that indicates cancellations, that's the number I'm looking for, or a lack of traffic should be well received by the market. And I've got to tell you, it's very strange. The home builder stocks moved up today. I think that's because some investors are beginning to think that maybe the Fed knows that it can declare victory not far from now, meaning that they may hold off from still rapid-fire rates after Wednesday because they don't want to blow it all up. Next week is also Dreamforce. That's a pilgrimage of tech run by Salesforce.com's Mark Benioff. We'll be out there to cover, and we're going to pay close attention to the Wednesday analyst meeting that Salesforce is throwing. Salesforce is a worldwide company, and that used to be a good thing. But now it's being hit by the strong dollar everywhere, while also experiencing a choppy quarter. And that's not what people will want to hear. Salesforce, like NVIDIA, is part of the tech bear market. I don't think we'll hear anything that tells us it's time to buy the stock. So why don't we just sell the darn thing for the charitable trust? Because we take a longer-term view, people. Do you know that we've liked Salesforce since $8? We've liked NVIDIA since about $20. I mean, look, we're staying the course. If Salesforce is an ugly moment, this too shall pass. I am not going to give up on quality companies only to see them roar back 6 months from now, or maybe a year. And that's what happens when you sell quality companies. Hey, junk companies, do whatever you want. Sometimes you don't need to overthink things, though. The short-term trade, the one that's going to work, the one that everybody loves, is going to be what we used to call General Mills. Because if FedEx is right about a global recession, then people are going to hunker down the food stocks. Those are the best in show. So all of these won't do as well, probably, as General Mills, GIS. Now, last week, I went to see Craig Jelinek. He's the unassuming CEO of Costco. And I liked everything he said because Costco thinks long-term. Most investors are worried about the company's margins. That's wrong. Costco cares about quality, value, and sales growth. I think that's the only way to measure the big box membership club. I'll bet this number will be pretty darn good. But that might not mean anything right now because people hate these kinds of stocks. I told the investing club in our very well-attended monthly meeting, you can still check it on the website, that I actually wish Costco stock would come down so we can buy more. In this market, I'll probably get my wish. Thursday, we also get the actual report from the company that brought the house down with its pre-announcement last night, FedEx. I think actually we will learn more, but it won't change the company's trajectory. We'll learn about what costs have to be cut. The new Qualcomm will also be on display when the company throws an analyst meeting that will detail all the automobile work that's now being done by this former pure-play telco chipmaker. I think it'll change the perception, and maybe people like this 10 times earnings stock that we own for the Travel Trust. Not much Friday, just some different indicators for manufacturing and service. I put them up, though, because all these different ancillary numbers have gotten weaker. These all do matter, but coming so close to the Fed meeting, they'll just be used to mock Jay Powell, regardless of what he actually says. Poor guy. Can't get no respect. Bottom line, yes, it's bleak out there. I'm not changing that in my view. No, this isn't, though, the first time I've seen bleak. We'll get through it together, but it takes time and, unfortunately, prices, meaning lower prices, and perhaps even an end to this miserable month before we can feel more certain about what we can buy and less certain at last about what we can sell. Why don't we go to Dave in New Hampshire? Dave!
Yeah, hi, Jim. I just want to thank you so much for all that you do for us little investors out here. We're working hard trying to save in 401k plans as much as we can. Jim, the end of next month, I'm going to be heading out with my wife to Times Square, and I'm hoping to stop at your restaurant and get some lunch. But my stock tonight is going to be Microsoft. I don't know when I should buy or if I should buy in, and I was hoping that you could help me with that.
All right, I'm so glad you asked me about Microsoft because at our charitable trust at our meeting, I actually said I don't have an investment case right here, right now for Microsoft, other than the fact that it's been consistently good. So I am not going to pound the table. We've had a long-term position in Microsoft. Is this the level to buy Microsoft? I am uncertain about saying that, so I'm not going to. I will tell you this, though. It's a darn good company. All right, now we're going to just stipulate that it's bleak out there. I mean, really bleak. But I've been through this before, and a lot of times when it's really bleak, it pays to buy, because 6 months to a year later, you're saying, wow, how did I have the prescience to do that? We will get through this together. Hey, haven't we always? On Mad Money tonight, retail has become one of the toughest corners of this market. So how is Home Depot faring after last month's earnings report? I'm talking exclusively to the CEO from one of the company's warehouses in New Jersey. Kind of blows you away. Then, in the face of volatility, we like to circle back to a game I started in 2001. It's called MI Diversify. Make sure the portfolios of Cramer are able to weather Wall Street's storm. And earlier this week, we had a chance to check out Amazon's Climate Pledge Arena in Seattle. And you won't believe some of the things that the company's vice president of worldwide sustainability was able to show us. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.